Yeah, I've had many regrets. Starting this YouTube channel is probably one of my biggest regrets. Hey everyone, welcome back to Trade Talk Tuesday. Today, it is our special AMA episode, Ask Me Anything. I'm really excited to answer all your questions. So we're just going to rip them off. We're going to rapid fire them. We're going to randomly put them up on screen, and I'm just going to answer them as we go. So let's get right into it. First question. Here we go. Put it up. You may have covered this already, but how can I sign up for your free trading picks, Gen B? Really? This is randomly the first question we're going with again? Okay, Gen B, here we go. We're going to break this down for you as simple as possible. First, there's a description in the link below. Put your mouse over that and click that. It will pull up what's called a landing page. See it right here? Put your email address into that landing page and submit. Boom, you're in. I will start sending you my Trade of the Day picks free every day. All right, let's hopefully move on from that. And second question, do you trade or speculate on any other investments other than stocks? From Phil B. Okay, this is a great question. The answer is yes, I absolutely do. And this could be like a bigger issue because I have some great trades, investments, alternative investments that I'd love to share with you. It's a whole other episode. So I will actually do an entirely new alternative investment episode coming up soon. You'll love it. For any sports investors, sports followers out there, I got some great stuff for you. I'll get it to that soon. But let's focus more on trading today. All right, pull up the next one. Okay, what the F do traders do in a bear market? Jay Lynch. Okay, now we're talking. Great question from Jay Lynch. It all boils down to portfolio rotation. So, for example, in bull markets, you have risk-on rotation, what traders call risk-on. So in those times, you're trading more of the stocks like Tesla or Roku or even Virgin Galactic, like names that move fast, move up, outperform in a bull market condition. But when a bear market comes and stocks start selling off, traders then rotate into more risk-off positions. And these are safer names like Kroger or Walmart or Clorox or Pepsi. So basically you play the sector rotation. In risk on, you trade the higher beta names. In risk off, bear markets, you trade the lower beta names. And another trick too is you could play ultra short positions. One that I really like is the ProShares Ultra Short Dow 30. The ticker is DXD. So this asset moves at a rate of twice the inverse of the Dow. So for example, say the Dow gets crushed, goes down 3% in one single session. The DXD is designed to go up 6% on that day. So see how it's twice the inverse, Dow down 3, DXD up 6. So in times of bear markets, traders would just simply rotate their portfolios, stop trading the risk-on assets, trade the risk-off assets like DXD, Kroger, Walmart, and that's how they continue making money in any market condition. Okay? All right, great. Here we go. Next question. With schools going partial in the fall, are there any home nanny or daycare stocks out there? From S. Rudy. Okay, well, to be honest, I don't think there's any nanny or daycare stocks, but there are two stocks that I like to play off this trend. The first one is Arco Platform, ARCE is the symbol, and they provide educational content to private schools, teachers, students, administrators, and parents. And their expected earnings growth for the next year is above 100%. That's a company that will benefit. Also, one that I actually like even more is Chegg. CHGG is the ticker symbol. They're a direct-to-student learning platform that allows students to find human help through the network of live tutors. So they're expected to grow their earnings about 26% in the upcoming year, but I think chart-wise, this is a stock that I actually like better to play off this school's partial opening trend coming in the fall. Either way, both companies stand to benefit from the uncertainty of school attendance in this fall. So they're the two pure plays that I would play off this trend. Okay, next question. Let's pop it up. Best small cap COVID pick. What you got from John G? All right, John, I covered this in Trade of the Day recently, but I'm going to say it again today. The one play I like the best, love this play, is the S&P Spider Biotech ETF. It's ticker XBI. Okay, so I know that there's a lot of biotech ETFs out there. BBH is one of them. IBB is another one. But I like the XBI over all the other ones. It's because they emphasize small cap growth. So here, pull up the top 10 XBI holdings, and you're going to see names like INO or Novamax or Arrowhead Pharmaceuticals or Aspirion. All right, not familiar with any of these names? Well, you're not alone. That's why I love the idea of having XBI, because any single day you could wake up and one of these names could have positive vaccine news that pushes the entire sector up, and these small names could be more explosive winners. So that's why I like XBI here. Okay, next question. Emma H. Do you still like Winnebago, WGO? Emma, I actually do. And I will admit it dipped on earnings, but this being outside trend, go outside, spend time outside, it's not going away anytime soon. So although Winnebago did dip on earnings, it's now bouncing right at like the $60 support level. So I think if this support could hold, we could see Winnebago retrace back up and retest 75, which is its recent high. I still like it here. All right, let's move on. Next question. How many trades a day do you do on average? And have you ever sold a stock that you regret selling? From Jill B. Okay, good question. In the war room, I've been averaging about 2 to 3 trades per day since the whole COVID panic began. So that's about what I think we're averaging currently right now. In terms of regrets, yeah, I've had many regrets. Starting this YouTube channel is probably one of my biggest regrets. No, just kidding, Jill. My biggest regret comes, I recommended Tesla at $30 a share, and then it doubled, and I sold it. I'm like, okay, great. I was early on Tesla, 30 bucks, quickly moved up to 60. Awesome. I thought it was great. At the time, I was thrilled, but now looking back, when I see Tesla at 1,600 a share, what I should have done was sold half at 60 and then held the remainder, trailing stopped it, and let that run. That entire second half, just let that run. So not selling half and then letting the second half extend higher and run, that surely is my biggest regret. Brian, I come from finance and have been trading for 10 years and only really have a 5% return to show for it. One thing I struggle with is when to exit a position, both when I'm up and down on a position. Any rule of thumb that could help me be a more consistent trader? Dustin C. Okay, great follow-up question to my Tesla regret from the question above. Here's a general rule of thumb. If you enter a trade, any trade, investment trade, and it drops 25%, close it out. Trade didn't work. Cut your losses, get on to the next trade. Reverse of that is if you get into a trade investment and it goes up 25%. That's great. You're off to a good start. I would sell half at 25%, then let the remainder of that position, the second half, ride for more. So say you sold your half position at 25%, and then you're holding the remainder, and say that 25% gain then trickles down to a 10% gain. That would be your close out the rest, because you certainly don't want to see a gain then turn into a loss. But then say that second half, you're up 25%, keeps going up. If you get to 50%, you can maybe sell another half. If you get to 100%, you could sell another half. And then from there, just trailing stop the rest. This is the best way, in my view, to properly balance the risk versus reward that you see constantly with trading. Okay, I got 5K. Who do I listen to, you or Lichtenfeld? Okay, Rafa coming in hot with the question. Okay, I want to clarify this first and foremost. No one's giving me any money. Don't give me your money. I don't want your money, okay? what we do is you would subscribe to my service, War Room, you would subscribe to Lichtenfeld's service, and then you would then trade his picks or my picks, however you see fit. So in terms of allocation, I mean, hello, clearly trade my stuff, right? But I gotta be honest with you. I do like Mark. Mark's my friend. Mark is probably the smartest guy I know when it comes to tracking dividend stocks and actually like researching biotech stocks. So let's hedge myself. Allocate 4,000 for my trades. Allocate 1,000 for Lichtenfeld, and either way, you're going to come out ahead. Next question here. What is the biggest mistake you see from traders making? From Ben B. Okay, this one's easy. The biggest mistake you could do in trading that I see traders making is that they get too emotional. They see the market's down and they panic sell, or they like get in their own heads and they think that they made a bad decision and didn't time it right, and then they let emotions dictate their trading decisions. And in my view, in my experience, trading based on emotion rarely is a good idea and rarely works. So if you could eliminate emotion from your trading decisions, you will be a much better trader. Okay, let's see. Next question. What the heck is going on with Tesla? And what's your thoughts on other stock movement indicators like candlesticks, RSI, MACD, etc. from Russell A. All right, back to Tesla. Okay, so I admit I didn't understand the whole massive upside move that we've been seeing in Tesla either. That is until I brought in my car for service last week, and then I saw their latest showroom displays. So full disclosure, yes, I drive a Tesla. I've had 2 Model S's over the last 5 years, and they're great. Okay, so I could finally understand why Tesla has been such a monster lately. They're transforming from a car company to a whole house power company. And if you don't want to, here's the one secret I did want to tell you. If you don't want to pay $1,600 for one share of Tesla, here's a little secret. The Global X Lithium and Battery Technology ETF. The ticker symbol is LIT, L-I-T. It's around $33 a share, and it holds 5.3% of Tesla stock. So not many people realize this, but LIT could be a great way to own Tesla for a far more economic value. They also asked a question about candlesticks. I love them. I use them all the time. RSD and MACD, I glance at those for support of a trade, but I don't base my trading decisions off either of those. So I just wanted to loop back on that final question there. Okay, let's move on. What separates good companies with innovative methods of selling their products like Carvana from others that are just gimmicks without much substance? From James H. All right, great question. Here's the answer. The answer is actually pretty simple. The market sniffs out gimmicks pretty quickly. So the key separator to look for is growth. Okay? You look for multiple quarters of strong growth, and that's what you want. And to me, that proves innovation. So looking at Carvana again, their net sales have grown by more than 100% in each of the past 4 years. So there you go. That consecutive back-to-back growth proves to me that it is an innovative company that's not a gimmick. So innovation proven by looking at growth. All right, next question. Hey, Brian, love the videos. Do you ever pick any cryptos? What do you think of them? Benjamin D. Okay, I don't want to mince words here. Never traded cryptos, never really believed in them, and I consider most of them, honestly, garbage. There's just, in my opinion, there's too many trading opportunities with equities that I just simply don't have time to look at cryptos, nor do I want to. Plus, to be fair, I don't live in my parents' basement and I don't wear footy pajama bottoms all day long. So trading cryptos kind of isn't really my thing. Next question. Hey, Brian, I'm new to trading. How much time do you recommend I set aside a day for this? From Allison K. Okay. Welcome to the game, Allison. Hope you're having fun trading alongside with us. To start off, if you want to watch the markets for the opening 30 minutes of the day and then the closing 30 minutes of the day, that's going to be a great way to get started. As I look back at my trading patterns, that's where I do most of my trading because that's where most of the action comes. So if you're first starting out, first 30 minutes, last 30 minutes will be a great place to get started. Next question. All right. Should I invest in companies I believe in, or is that a bad idea? From Joe H. Joe, you're on absolutely the right track. But I'm going to give you one little wrinkle, okay? Instead of investing in companies that you believe in, invest in companies that your wife believes in, or your girlfriend. You know what I mean, though. For instance, my wife believed in Lulu 15 years ago. Did I buy shares of Lulu? No, of course I didn't. That's not a mistake I'm going to make again. So the trick is observe and take notice of what your wife or your girlfriend is spending her money on and invest in that company. I mean, personally, I believe in Nike and Budweiser. I'm investors in those. But Lulu has been the tremendously better outperformer versus those two. So track where the ladies are spending money, and that's going to lead you to winners. Next question. Your trade of the day would be even better if you focused on a stock that people could afford, from Daniel C. Okay, so Daniel, honestly, I do try to balance it in trade of the day. So for every time I recommend Pool or Alta, for example, which are $200 stocks, I also have a cheap play like AMC that I would mix in just for that balance that you're talking about. And by the way, all three of those names were winners. The point is, every single week here, I try to feature plays that I believe will be winners. If that happens to be a $200 stock one week, I can't control that. I want to share it with you. It could be a $10 stock one week. I want to share that with you too. The bottom line is I want to follow where the money's going. I want to tell you what I think will be profitable and what will be winning. If it happens to be a $200 stock one week or a $2 stock next week, I really can't control that. I'm going to share it with you based on what I think. But here's the thing. If you sign up for Trade of the Day, you're going to get a great mix of $200 stocks or $2 stocks every single day. My partner, Karim, for example, he just doubled his money on MoneyGram, which is a $3 stock that he profiled in Trade of the Day. So follow along with Gen B. I walked through the steps to sign up for Trade of the Day at the very beginning of this video, and then you will start receiving all of our picks. Okay, Daniel? All right, moving on. A lot of people around the country are still stuck inside together. Oh, I see where this is going to go. So, are there any publicly traded companies that are benefiting from the extra bedroom time couples have? Church & Dwight seems like a sound investment, but it also seems pretty expensive for a company that makes rubbers. Anyone else looking into this? Thanks, Matthew M. Okay, I am going to be delicate here, Matthew M. And I'm going to do what a good trader does, which is hedge myself. So when it comes to couples stuck inside, the best play, in my opinion, right now is Keurig Dr. Pepper. You're not working from home. Your wife or girlfriend is working from home. What's the first thing you're going to do? You're going to go out and you're going to upgrade your coffee maker. KDP. That's the stuck inside home play. That's the best pick. Let's move on. Do you primarily recommend stocks, or do you also recommend options, long calls, puts, or spreads? From Mark S. Okay, here in Trade of the Day, I primarily recommend stocks. That's kind of like your introduction to trading or trading 101. Then, if you're ready to take the next step with us, I trade probably 90 to 95% options in the War Room, which I explained is our live trading portal. So the short answer is I trade both stocks and options, all depending on your trading level. Stocks here in Trade Talk Tuesday and Trade of the Day, options in the War Room. Okay, next question. Hey, Brian, I am in my mid-20s and have a lot of interest in day trading. However, I am only used to buy and hold investment strategies. There is a ton of opportunity in today's market for quicker profits, but I'm a bit apprehensive about fast-paced trading. Where would be a good place to start, and how do I know when it is right to exit a position? Love your channel. Keep it up, Nikki R. Okay, Nikki R, thank you. Start right here with us in Trade of the Day. Sign up for free, and then I'll walk you through everything. And it's a great introduction to going from your buy and hold trading to having success as an active trader. And spoiler alert, what we do here is going to be way more fun than buy and hold. Okay, and with that, our very first Ask Me Anything episode is over. If you want more information on the War Room, head to the description below, and there's a link there. Click on that link, and you can learn all about the War Room. Until then, thanks for everyone for joining, for tuning in. Hope you liked the episode. We will do more in the future. And until then, mask up so I can watch my live sports. And then I will see you here next week for Trade Talk Tuesday. On that, cue my exit music.